Presidential elections are something that everyone gets excited about, but in my view are regularly interpreted incorrectly as it relates to investing in the stock market. Most people have the view that if my candidate wins, it's going to be great, and if my candidate loses, it's going to be bad. The fact is markets pre-price widely known information, and candidates and campaigns fit into that realm pretty tightly. And there's a very long history. One of the lessons that I teach people over and over is that when there's a very long history of something with a certain regularity, like presidential elections, and stock prices in parallel, you look to see if there's any secrets there. And there's this pattern that's almost perfect. And the pattern that's almost perfect is that the Democratic candidate tends to scare stocks more if the Democratic candidate's going to win in the election year than if the Republican candidate's going to win in the election year, because the Democrat's seen as more anti-business, Republican candidates typically seen as more pro-business, more anti-regulatory. But then that flip-flops in the inaugural year, and this is the part that people don't get. If this year Vice President Biden were to prevail in victory, that would dampen returns in the back half of the year from that fear. But then the inaugural years of Democrats are overwhelmingly better than the inaugural years of Republicans. And the 2 years together, Republican and Democrat 2 years, election year and inaugural year, have almost identical returns. It's just a difference in timing. In fact, if you go back through the history of most of the 20th century, back to the days of Franklin Roosevelt, when we've had a Democratic inaugural year, they've been double-digit positive every single time, with the exception of Jimmy Carter, whose inaugural year was only a negative 7%. The Republican victories tend to be strong in the election year, weaker in the inaugural year. So that's pretty much the impact that you should expect this presidential election to occur, depending on which candidate wins. And of course, the good news is, and I've studied this, and I'm going to make a bold prediction, we're going to get a winner. We always get a winner. And we always find at the end that the winner isn't as bad as we feared the winner was before we got to the election. So I've said the way to think about this is just a matter of the timing of which does better. But overall, I know you want to think that your candidate would make things great and the other one would make things terrible, but for the stock market, it doesn't work like that because the market's pre-priced. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.